For most of us, the central bank jargon plays second fiddle to what this all means for our mortgages and debt loads. Rates may not have changed today, but Stephen Poloz offered up some insight into where they're headed and when they may get there. Poloz has spent years trying to get interest rates back to what he calls neutral. Neutral, he says, is somewhere between 2.5% and 3.5%, depending on what else is going on in the economy at the time. So, like art, he'll know interest rates are at neutral when he sees it.
You know, a bit like landing an airplane on a foggy day. You feel the wheels touch, and then you think, we've arrived.
Even in deliberately vague anecdotes, Poloz leaves clues. The bottom range is 2.5%. Right now, we're at 1.75%. So that's 3 hikes to get back to neutral. We were expecting those 3 rate hikes this year, but now the bank has a laundry list of troubles weighing down the economy and will only say rates will rise over time. So it looks like debt-weary Canadians will have an easier 2019.
Borrowers can be relieved that in the end of the day, we may only get a single 0.25% rate hike, and that might be it.
It'd be easy to hear all this and have serious concerns given all the uncertainty, the global trade wars, and falling oil prices. But
by just about every measure, the Canadian economy is doing slightly worse than it was last year. But by no means does that mean we're in a recession. It just means we have to face a slower economy in 2019 than we were in 2017 or 2018.
Okay, so Peter, a lot of uncertainty out there. What can the Bank of Canada actually do to mitigate that?
Stephen Poloz has the problem that every central bank governor has, is he doesn't have a lot of options. He can raise or he can lower interest rates, and there's not a lot else he can do. Here he's decided to wait, which I guess is its own option, but he's dealing with 3 big things: the global economy and then kind of a 2-track Canadian economy, the energy economy and the non-energy economy, which are behaving very differently.
Okay, thanks a lot, Peter.
You bet.